Chris, you are one of the handful of people who've dedicated a portion of their life and intellect to identifying the attributes of a stock that's going to have mega growth. So, what I'd like
Sure.
to ask you is, can you name two businesses that you believe have the attributes you look for in multifold growth that you own and that you think will be multi-baggers and hopefully someday 100 baggers?
How we doing, folks? We are not here in Ireland. Me and Emmett are off away on holidays, not together. That would be very strange. So instead of a podcast that's up to date, I suppose this week we are giving you what was once an exclusive interview with Chris Mayer for our Nexus subscribers. So Chris Mayer is the author of 100 Baggers and Where to Find Them. He's been on the podcast a few times, I think. This might be his third time now. And he's one of the great stock pickers of our time. His book, 100 Baggers and Where to Find Them, is kind of a seminal piece on what we're doing here in terms of stock picking and finding those life-changing investments. So I think this interview will be really beneficial. It is dated, so this was first published in November of 2023. So any facts and figures, take that into account when you're listening. But all the stuff he's saying, all his kind of ethos around stocks, the companies he mentioned, they all kind of feed into this thinking of finding those life-changing stocks. And I think it's going to be really beneficial, even if it is a bit dated in terms of the actual content. So hopefully you enjoy, and we'll be back to normal programming next week.
Chris Mayer, author of 100 Baggers, Stocks That Return 100 to 1 and Where to Find Them, or rather How to Find Them. Welcome back. Chris, I have a very practical question to ask you, and it concerns brokerages. Every broker, of which there are thousands, has their own angle. And I wondered, how do you access a stock, for example, in Sweden, that you see and you identify as one you want to hold in your folio? Can you talk to me about brokerage solutions, or even the solution you use for accessing businesses?
Yeah, I mean, I can tell you, what I use. I use interactive brokers. Um, I'm able to access the Swedish market no problem. Really, every market in Europe, I haven't had any problem with anything that I've wanted to buy there. And also, interactive brokers is, very cheap and competitive on commissions and all. So that's what I use.
Great. That was such a simple answer. I thought you'd say, well, when I'm buying shares in Australasia, I have a brokerage over here. And if I
No,
just have.
no, I do. I mean, I do have a Swedish broker that I use, but only in like very special circumstances where I'm buying a block from somebody. But for otherwise, just
Retail
buying things
trades.
on the exchange is no problem. Yeah.
Well, Chris, you are one of the handful of people who've dedicated a portion of their life and intellect to identifying the attributes of a stock that's going to have mega growth. And we know 100 fold growth is really just an eye-catching return. But if a company grows 10-fold, 20-fold, 50-fold, look, everybody is happy. So what I'd like
Sure.
to ask you is, can you name two businesses that you believe have the attributes you look for in multifold growth that you own and that you think will be multi-baggers and hopefully someday 100 baggers?
Yeah. Yeah, man. My holdings are fairly public on Twitter. I think everyone's always figured out my portfolio, and I write about things on blog and whatnot. So, um, yeah, I wouldn't put the 100 bagger expectation on anybody. So, certainly
Mhm.
these are not. It's not saying these will be 100 baggers, but I think again, based on what we've talked about, the underlying compounding, high rates of compounding, and the ability to do it for a long time. There's a couple that I like. I mean, the two most recent. There's not a lot of turnover in my portfolio, so two most recent. One was Lumine Group, which was a spinoff from Constellation Software this year. That's the latest addition to my portfolio, and I don't know if you're familiar with Constellation. I know you are, Emmett, but maybe our listeners aren't necessarily. But Constellation Software has been a long-term big winner in the stock market. It's what's called vertical market software, so software that's focused on some industry niche. So as opposed to horizontal market. So horizontal market software you could think of, say like, I don't know, say like Excel spreadsheet. It's can be used, but anybody can use it in any different industry. It's not particularly tailored for a specific task. But if you were running, say, a golf course or an auto dealership, there would be a specific software solution you would use for that business, and that's
Mm.
vertical market software. And so that's what Lumine and that's what Constellation does. And Lumine was spun out of Constellation, and what Lumine focuses on is a particular industry vertical, which is anything to do with media and communication.
Mm.
So they've got some interesting businesses underneath that are real, they provide software to TV, radio stations, and all kinds of other things. And they're basically following that Constellation playbook. So there'll be acquisitions, high returns, software business, high returns, a lot of reinvestment. So I'm excited about that one. It seems like it has a very, very, very long runway and a good team at the
And
top.
I stuck it into our tool here that we've built, Nexus, to see what score it gets, and it wouldn't stand out with a simple number as elite because its return on equity is just not growing gangbusters yet. And it's a perfect example of why you really have to get under the hood. And no number will tell you it's a Constellation spin-off. That's a human intellect observation.
Right.
Do any of does the ROE concern you, or do you believe they're going to right that ship as the business gets more efficient?
Yeah, I mean, it's part of the way they do the spinoff. There's some complicated preferreds that are involved, and then they convert at the end of the year. So it's kind of the same thing as if you look at Topicus, which is a Constellation spinoff before this. They have the same effect. So the first year is a mess as the accounting treatment of those of convertibles, but next
Uh,
year, or at least the year after that, the financials will start to be cleaner, and then people will be able to see it. So right now, it takes a little work. You have to
mm,
kind of,
mm.
yeah.
Okay,
But the
that's a
underlying free
very
cash flow is good, and I think the return on capital there, yeah, it's going to be something in the neighborhood of 25%.
oh my goodness, sure, that's what we want. That's the sweet spot. Um, Insider ownership is a little bit on the low side, I noticed. So are the managers and the owners, were they formerly in Constellation Software,
Yeah,
and is
yeah,
there
and
reward?
Constellation Software, the mothership is going to owns a lot, and when the convertible is preferred, you're going to have that insider ownership.
Oh,
And also Constellation Software has probably, has the best, I think, compensation program I've seen. It's focused on ROIC and growth, and that's the way Lumine Group will also be compensated. And the executives at Lumine Group, when they get their bonus portion of it, they use to purchase stock in the open market, the same as Constellation. So you have really good alignment that way.
mm, mm,
Your
mm.
management team is going to be buying shares in the open market with their bonuses and invested right alongside with you. There's no gifts.
No, that's great. Absolutely wonderful. And then, so effectively, it's a Topicus kind of twin.
Yeah, Topicus is different because Topicus is a European constellation. It's focused. It can go anywhere, any industry. So there's a lot of different businesses there. That's really like the constellation, kind of a mini constellation in Europe. And
Yeah.
Lumine is different because it's confined to one vertical. So this media and communication sort of vertical, as
Mm.
opposed, you're not going to see them do something in trucking or medicine or something like that.
Yeah. You mentioned in your book, Chris, that you just need good filters. And we've seen, I mean, we've the best of data now in MyWallSt. It's been upgraded quite a lot in recent times. But we still see discrepancies from various information sources. I'm sure you've seen it too.
Yep,
You could go
sure,
to,
absolutely.
like, most people jump on Yahoo Finance, and we've a FactSet data feed, and then we'll jump onto the other websites, and we've a high belief, with an incredible smaller business called Stratosphere.io, who seem to have everything bang up to date for every company
Yeah,
out
I use
there.
that as well. It's a great
Oh,
service.
interesting. Oh, very interesting. So which source, like when you see a discrepancy, what do you do? Do you go and figure it out yourself? Do you go
Yeah,
to
I would go
common
and figure it out
filings?
myself. Yep,
Hmm.
I would go.
Hmm.
But I will say, like with filters, you're going to miss a lot of things. So, like Lumine, to
Yeah.
be honest, I would never come up on my radar if I didn't own Constellation. I
Yes.
would just never, it would just never, because of the things you mentioned. It's not a clear, uh, it's not something that comes up cleanly on the screen. So
Mm.
that's one thing that makes it interesting too. But otherwise, uh, yeah, my filters would probably miss that, and that's okay. I guess that's the point I wanted to make is you don't have to feel like your filter has got to capture everything, and you're going to miss some things, and that's okay as long as you got a good enough population to work with. I think your filter is good, and you don't want too much. I mean, that's the whole
Yeah.
point of a filter. Right? There's thousands of securities, and we have to find a way to
Yeah.
at least
Tighten
get
it
down
down.
as yeah, exactly.
I think you answered this already, but when you look at filters, there's almost no business that ticks all the boxes, and there's absolutely no business with no risk. So when we look at businesses that are small, have a peg that's less than one, has accelerating revenue and improving return on equity, and a competitive advantage in a growing industry, it's a long list of complex things for a business to go green light, green light, green light. Which of
Yeah.
those parameters, or indeed which parameters, are you most happy to relax? Is it market cap? And after market cap, which one would you be happy to, let's say
That's a
you
great
wouldn't give it a,
question.
yeah.
Great question because I've thought about that a lot. Uh,
Mm,
so one thing I'm very reluctant to relax, but number one, yeah, market cap would be one. So
yeah.
I would, let's say $20 billion or something like that. That would be the one where if it checked everything else, like you say, that would be
Yeah.
one that I would relax.
Yeah.
But otherwise,
Same
I would
here.
be very reluctant to give up on. For me, it's like I look for insider ownership and that alignment. That's key. Uh, the balance sheet risk, those are things I would never compromise on. And some of the other stuff is a little bit of a sliding scale. So we talked about, like high returns on capital, but there are trade-offs there too. So for example, I've owned Brown and Brown since inception of my fund. In January 2019, I bought my first shares around 25 bucks. And it's like
Wow.
$73 a share now. Um, so it's, doing well. Um, but it's got the lowest returns of capital in the portfolio. But there's trade-offs there because otherwise, it's also such a low risk, kind of low drama, steady as she goes sort of name. And so I like having it in the portfolio. It's such a resilient sort of business. So some of these times you're making a little bit of trade. There might be qualitative trade-off. So there might be to take it the other way. There might be a company that has really lights out numbers, like super high
Mm,
returns on capital, really good growth, but I can't really get so comfortable that the competitive advantage is real. I know, for example, I looked at a bunch of payment companies, and I could never get comfortable because there are just so many competitors. There's
yeah.
so many different. I just felt I couldn't really get a handle on it. So I don't have any exposure to that space. So
That's a very
I
good
guess
point. There's over in the UK and in Ireland, there are different regulations on startup investing, when compared to the US, where you need to have a, what is it, a Reg D entity or something like that. You need to be approved by the SEC to do a raise from the public. And my point is that I keep an eye on small companies that are in build and are doing crowdfunding raises. And honestly, last year I must have seen 12, 13, 14 that were in the payment tech space. And you just
hmm
don't know. And they kind of say the same thing. They kind of do the same thing. They're
right.
differentiated on what I regard as small points, but it is a very, very crowded market. And
Yeah, I
really, if
mean,
you're
you
not
see that
already
with
the biggest,
Adyen. So Adyen, a
yes,
couple
yeah,
year ago or so was the monster everybody loved, and now you're
hmm,
starting to see competitive pressures. So their margins
yeah.
coming in, and so you got to be careful about that.
And
Competitive advantage.
they
I
were,
spent a lot of time on that. A lot of time, and every time I looking at a business, I spent a lot of time on that competitive position and whether or not I think they can sustain those kind of returns.
I'm sure you saw the paper by BCG and Morgan Stanley published about a year ago. Anything in the past that isn't last month, I say about a year ago, but it was a BCG paper and Morgan Stanley where they did a 20-year study on what single factor is the greatest determinant of share price appreciation. And the
All right.
net bottom line was sales growth, revenue growth. So that's there that we put, let's put that in box A, revenue growth. And they say by association, ultimately that means it's net profit growth, but just year on year, you see sales growth. In the other corner, we also have, let's say, I don't want to call it a competing number because really it's a complementary number, but let's just say it's a competitor for now, which is return on equity. If you could only look at one of those two numbers, which would you choose? In other words, which in your mind carries the greater importance?
Right. Well, you see, if I was like looking at a 10-year number or something like that, and I could see looking back, um,
Yeah.
that's a tough one. That's a tough one. I mean, I guess I might see the problem with ROE is it does have some definitely. I know there's some companies that have pretty good ROEs, but they're leveraged. I wouldn't be interested in them, or their financials. You know, that's the main thing. A lot of financials will show pretty good ROEs, but their businesses I'm not interested in. And then there's a lot of accounting things that can make ROE look good, but with revenue, it's kind of hard to fake it. I mean, you either have the
Yeah.
sales or you don't. So I think I might lean revenue growth. I think you might get a better list that way, and then so if I have this population of companies that have grown revenues by whatever it is, 20% a year for 10 years, I bet that's a very good, better list than if I took a list of companies with 20%, 25% ROEs for 10 years. I think it
Mm.
might get a better list, but
Mm.
yeah, I don't know. That's a tough call, I think.
It is a tough call, and like you, I look in the rearview mirror and how everything is trended out. And with Stratosphere, for example, they do some lovely graphs where you can just see revenue growing year on year, and then you throw ROE on top, and it's a wavy line. But you,
Exactly.
ROE is it sways a little more in the wind, but you can see quality jump off the page. Like for example, Wise, the UK international money transfer agent. Now,
Sure.
within 5 minutes of dissing payment tech companies, I'm about to say, I think Wise has something special. It powers B2B and B2C for money transfer, but its sales growth, it is just unbelievable, or rather it's revenue growth. And then when you look at its ROE on top, it's just growing and growing. But for me, we have built in Nexus, we've put a slighter higher weight on revenue growth, and I was keen to hear what you had to say about that.
Yeah, I think
So
that's probably right. I think that's where I would lean it. And of course, you always come up with ones. I mean, I think of Copart as being one of those where it's just like a super clean, you know, on ROE, it's not really so wavy. It just
mm,
bangs out the number every year. So you can run into those, but I think that's right to probably slightly weight the revenue growth.
last time we spoke, you mentioned a pal of yours, or let's say a business associate, almost friend, Chuck Ackrey, who when I spoke to about 10 years ago, said, "Just buy American Tower and don't sell it." And did I listen?
Yeah, he
No, of
still
course.
owns it. Yeah,
Yeah, he
yeah,
does actually, and I'm sure it's served him well. So I know you speak to Chuck on Charles on occasion, regularly, perhaps. What businesses do you both admire at this time, or better still, is
yeah.
there a business that you both
I can
own
tell you. I
shares
mean,
in?
I don't. Well, I don't want to overstate my familiarity with Chuck Ocker. I don't want people to think like I'm sitting here and
Hmm.
chatting with them on the phone about ideas all the time. That's not the case. But I
No,
talk
no,
to him
I got
occasionally.
it.
Yeah,
Well,
yeah.
he's a yeah. We have to find the right adjective. He's a friendly associate who'd know you in a crowd.
He would. Yes, he would. He would. That's fair to say. Well, I mean, I think. I mean, he owns a big position in Constellation, and he owns Topicus. He's a. I think Chuck Ocker is one of the largest shareholders in Topicus.
Yeah,
So
he is.
I own a good
I
slug of
think he's the
Topicus as
second.
well.
I think he's the
Yeah,
second biggest shareholder
yeah.
in Topicus.
So that's definitely one we both admire and we both own it. Um, yeah, so that's definitely fair to say.
Mm. So you mentioned to me recently a company that I was hoping you might talk to me about, and then we'll let you off the hook. And it's Teqnion, which was also produced on our list of 10, our first cut of 10 from Nexus.
Uh-huh.
And I really would appreciate if are you familiar? You are familiar with the business.
Yeah, I mean it's again this is another one that's pretty public that I own it. I mean they recently raised capital and I was among the handful of investors there that participated in that. So that's out there. Yeah, I own it. I bought shares almost a year ago. And we talked about Sweden before, and
Yeah.
I love that Teqnion is what you would call what people call a Swedish serial acquirer. So it's a business that's where it's built to acquire other businesses as part of its plan to grow. And there are some long-standing, very successful models of this in Sweden. There's Lifco, there's Lagercrantz, there's Indutrade, there's Bergman and Breving sort of spun out these companies. There's AdTech is another one. So I was over there in Sweden for a conference, and I met the Teqnion guys were there. So this is one where it was just random chance. I happened to see CEO Yuan present, and I liked what he had to say, and dug more into it. And I've spoken several times with Daniel, who was the head of acquisitions there, and I think. So Teqnion, I mean, it's they have, I think, about 25 businesses now, different businesses, and small, but I love the culture there. I think both those guys have, they're out there they're out there publicly. If you Google them on or put it on YouTube, there's some good interviews and things that they've given and talks about Teqnion. But you'll get a sense for kind of their culture and how they think about these things. Is very in line with what we're talking about. This long-term focus, is appreciation for compounding. I really like that one. Again, I own a couple of different Swedish serial acquirers, and it's a space that I'm definitely interested in and watch.
We're just as you and I are recording, we and MyWallSt are in the final stages of tightening, insofar as you can, the scoring mechanism, and we're tweaking it. But right now it is in our top 5, and it has like 5-year revenue growth that's trending up. It has 5-year return on equity. It's trended up 4 out of 5 years, and as we said, it's like a leaf in the wind. It has return on equity currently, I think 25%, 26%. It's a wonderful business. And what I get excited about is you telling me it has a great culture, because that is never going to be a number. It can be measured, I guess, and whether it's a Trustpilot or a Glassdoor would tell you it can be. But really, there's something about culture that you need to see it and feel it. And that is really encouraging for me personally as an investor to hear the Teqnion. So you're a long-term you plan to be a long-term holder of Teqnion and Lumine. And here's an awkward question for you, and then I'm going to let you go. If you could only hold one in your coffee can for the next 20 years, would you choose Lumine or Teqnion?
Sure. Yeah. If I could only choose one of those, yeah, I think I like Teqnion. I'd go with that one. Now, again, I'm in it for a long term. So if this, the stock's up or down a year from now, it's not gonna bother me. So, I'm thinking of this as 10 years out. We'll talk about what it's done. And
we'll have you on
hopefully
Stocks Up in 10 years.
Yeah, we'll look back. We can play clips of us talking 10 years before and see how those ideas planned out. But I should own both over that. I don't see why I would ever sell.
No, I get it.
Mine either.
I get it.
So
yeah.
I should definitely have both. We'll see.
It's an unfair question, because really, you just don't know which of your winners will keep winning. And very often the one that you think it's ranked 20 out of 20
That's
turns
happened to
it
me
around.
lots of times.
Me too.
That's one of the reasons why nowadays I keep a portfolio. When I started the portfolio to build it, I keep them kind of close and wait. I don't do this thing where people like to, they put 20% in their favorite name and then 3%, they have a couple of 3% positions. The problem with that, and it's happened to me so many times that I've changed, is that the 3% position winds up doubling, and the one that you really love, is the one that underperforms. So
entirely.
It's very hard to know which one of your babies and which one of your darlings is going to be the best. So that's why you have a portfolio and set them off into the world.
And entirely here. I mean, since I was a kid investor, and I only had 200 a month to put into stocks, I got used to having a fixed amount, so I didn't go kind of heavyweight on anything. Chris Mayer, it has been a pleasure. It always is. And I look forward to talking to you again. If I can ever help you, just let me know. And in the meantime, here's to 2024.
Here we go, Emmett. Yep. Thank you very much.